The world is projected to be in quad 1 for Q3, yet all you hear is, I don't know if that, yet all you hear is talk about rate cuts and more QE. That seems to be a mismatch. What's your take on this?
Well, we went through this yesterday. I mean, it's the mismatch is what you hear is what you hear, right? I'm assuming what you hear comes from old wall media. Now, first things first, don't listen to that, unless you just want to be entertained and make fun of it or whatever. But also to use it as your backboard, because what you want to do is invest alongside not what you hear, but what you see within the rates of change of data. So let's do a couple things here, because Joe Kernan, one of the most amazing investors of all time, I don't know, like to 3.1% GDP. How can we be in a recession? I mean, the guy, first of all, it's a quarter-over-quarter seasonally adjusted number, Joe, which is not the year-over-year, which is not going to predict a recession. Secondly, this is a number that's really old news. What the street should be looking at is the slide where we're at currently on slide 14, where we're now casting 1.53% GDP, Joe. So I don't know. Now it's one. I don't know, Joe. What do you think? I mean, it's the first one that we've had. I don't know, since 2016, Joe. Yeah, I don't know. Yeah. Well, now you're going to know. Okay. So we have not had and that's a critical point. We've not had a one handle on GDP since the last time people were like belly flopping, Rodney Dangerfield style into the water with their equity portfolios. Don't forget that the average decline in the Russell 3000 into the 2016 lows was 4%. 38% to be precise. So again, let's give you a little eye candy on what is actually recessionary data. Okay, this is important. Go to let's see here. Now I don't know my slide numbers. Damn it, that's a bummer, right? Okay, so let's go durable goods, slide 38. That's one there where we had the question today. But again, it's not a forecast anymore that which is obviously you can see the dotted bars. I mean, we think that durable goods are going to be negative year over year all the way through August and September, okay? So the recession in durable goods orders, or the recession in industrial production growth, has already begun, okay? So that part of the economy is not a debate. Why do you think people are so schizophrenically panicking about this China trade deal? Because it's their only hope that gravity doesn't continue to occur on the global industrial side of the economy. If you go backwards in this deck, I'll show you more on that. CAPEX, there's another one. CAPEX, the comparison on slide 36, guys. The comparison is equally daunting, okay? So CAPEX has already gone towards 1, and it hasn't even had to cycle the July and August compares of 9% in particular and 7.6% respectively. So what we're showing you there is that the comps only get more difficult. So the economic data is only going to slow more, which means you're only going to need more cowbell, and people will be begging for more rate cuts. So again, this is the point, is that parts of the economy fully loaded actually with earnings. Look at this one. This is actually going to shock some people. Not that you would want to shock people, because shocking is just showing them something they didn't know because nobody on CNBC told them about it. But look at on slide 70 of the current macro deck. And let me just circle this one for you, all right? Because this is a beauty. This is just a beauty. A Darryl Jones, Johnny Gogger beaut, all right? Here we go. Ready? Wait for it. Wait for it. Woo! Look at that beaut. Woo! Oh! Howdy, howdy! What the hell am I going to do with that? This is the Q2 update. Now, don't lose your mind yet, because this is only nine out of the S&P 500's 500 companies. So you're saying there's a chance. But currently, on the 9 companies that have reported earnings, this has been reported by nobody. And this is the most easy news to report. Currently, the S&P 500 earnings growth rate is minus 25%.
All right, back to questions.
Yes, but Marianne Bartel says last night, well, because we don't see earnings negative yet year over year, we are constructive on buying stocks.